Morning, everyone, and welcome back to the NWR Virtual Investor Conference Series 11. I'm your host, Banjo Blake, and next up we have AI Media Technologies. AI Media is a vertically integrated media technology company that primarily services in captioning, transcription, and translation of media in any language. AI Media is one of the biggest captioning providers for education, corporate, broadcast, and government sectors. The company is continuing to expand in global markets with offices currently running in the US, the UK, Australia, Canada, and Singapore. I am joined today by co-founder and CEO of AI Media, Tony Abrahams, and CFO, John Bird, who has been a part of the media project for several years. Thanks for joining me today, gents, and welcome to the conference.
Very much. Thanks for having us.
And over to you guys when you're ready.
Yeah, thanks. And thanks everyone for being here. AI Media is a global technology company delivering live and recorded captioning, transcription and translation. Since we listed about 18 months ago, we've continued to pivot towards more technology and less tech-enabled services. In terms of competitive advantages, we deliver this service and these products with 5 key competitive advantages. The first is proprietary technology. Proprietary technology built in-house over the 20 years since I co-founded the business, but also proprietary technology of the 5 businesses that we have acquired, the most significant of which being EEG, which we acquired 12 months ago, which has delivered us a fantastic technology play straight out of the leading position in the United States. And we're seeing incredibly strong growth from that technology, those technology products that are EEG's fantastic legacy and future. The second point there is security. We deliver services for the top end of town. Whether that's broadcasters like Channel 7, Channel 9, Foxtel, or whether it is parliaments like the British Parliament or the New South Wales Parliament. Security is very, very often top of the list. Integrated systems, so we make it really easy for our customers to order live or recorded captions, translation or transcription. We do it in any language, and we do it with a global footprint. So we have local sales teams based right around the world, delivering our global solutions tailored to local audiences. And I'm currently joining from New York, which is the headquarters of EEG, that transformational business that we acquired 12 months ago, and we just had a week in Las Vegas at the National Association of Broadcasters conference, which was incredibly well received with our new and improved product suite. So exciting developments there. That product suite really focuses on not just the core of delivering accurate speech to text, which is in the middle, and that is done with an automated service called Lexi, a semi-automated service called Smart Lexi, or a human curated service, which is our AI Premium, all linked together with the iCAP gateway network and a series of hardware, virtualized and cloud-based solutions that encode video in any format to any format, and display those captions anywhere in the world, and that's really the secret of these two businesses together. In terms of automatic captioning, we've certainly seen some headwinds at the lower price and quality point in the industry, where people have chosen to focus on on free solutions that have just become available in Microsoft Teams and Zoom in particular. But at the same time, we're also seeing the better class of customer, those business-to-business customers, now looking to AI Media as the deliverer of the best quality automatic captioning, which we deliver through our Lexi and Smart Lexi services. So in terms of our quarterly results, very, very good quarter. So a 28% revenue growth year on year, but really critically, it's been a 135% increase year on year, and a 47% increase quarter on quarter, showing a huge acceleration in that technology-driven captioning solution in terms of Lexi and Smart Lexi, which is seeing continued improvements in margin, improvements in free cash flow, and also a very strong cash balance. In terms of our future success, we are very much focused on continuing to invest in the world's leading platform for delivery of captions, which is iCap, continuing to deliver across the world, expanding the access to the iCap network outside of US broadcast, and working very clearly with new sales channels through the indirect partnership program, the first of which we announced last week with the quarterly on the Hopin platform. In terms of guidance for FY22, we are forecasting revenue of 60 to 62 million, which will see a bit of a jump in our fourth quarter revenue over what we delivered Q1 to Q3. Gross margins in excess of 50% and positive EBITDA, notwithstanding that we continue to invest in growth in what is a very, very strongly growing market sector. As captioning, transcription and translation increases well above trend, both because people are seeing the benefit of adding captions, translation, and transcription to an increasing amount of content, but also when we see legislation around the world increase, so that it becomes important for companies to provide accessibility to content in compliance with legislation that's guided by the UN Disability Convention, which in a format similar to the kind of net zero carbon agreements around the world. This is about providing access for people with disability to content, and very, very well followed. As a result of that transition towards higher margin, more technology products, we've had a massive turnaround in our losses of last year, so that we are now cash flow positive and EBITDA positive, and we're looking forward to continuing to extend that trend. And with that, I might say that I've probably used my minutes, and I'll hand back to questions.
Awesome. Thanks for the presentation, Tony. Currently have no questions, but if you would like to ask Tony or John a question, please submit to the Q&A panel now. Tony, what is coming up in the next 3 months for AI Media, and what is your main focus for the next quarter?
Yeah, look, I mean, the strategy that we really clearly articulated post acquisition of EEG was to continue to migrate our services away from human moderated in real time towards technology powered, and we're expecting to see that trend continue. We did flag that it was a 6 to 9 month sales cycle, and a sales cycle that really commenced in January. So I think the first thing that shareholders and prospective investors can expect to see is further contract wins. Those contract wins will be announced ahead of revenue being received. And as we've previously identified, we have a very, very good confidence level in the in the sales pipeline. The key win in particular that I spoke about just before in terms of Hopin was just 8 weeks after we announced the launch of that partner program, and we would expect further partners and further customers to be joined onto the platform in the next 3 months, and therefore that revenue increases would follow 1 to 2 quarters ahead of that. So the thing to look for in the next 3 months is contract wins, and then in the 3 to 6 months following that, you will see that in the revenue numbers.
Thanks for that insight, Tony. How much of your $30 million cost base would you classify as discretionary or growth in nature?
A significant amount of that is growth in nature. So, for example, we've added 8 salespeople around the world since January. Very little of which has actually fallen through into revenue or EBITDA just yet, but the pipeline is very strong. A significant amount of it obviously is related to the delivery of our products and services, although most of that is obviously captured within the direct cost line. We've obviously made an enormous number of investments before and since listing to both gain traction in markets around the world and to build technology products that are really built for the future. I'd say around 25 to 30% of our OPEX is probably characterized as fully future focused, with the remainder of it being delivery on our existing customer obligations.
Thank you for that. At what rate is the sector growing, and how will AI media compare to that growth over the next 3 to 5 years?
Yeah, look, the sector's probably growing about 8% a year. And obviously you would look to make sure that AI media is growing above that trend. And that's certainly something that we're focused on continuing to exceed that trend growth of the industry. But that said, the trend growth of the industry in and of itself is pretty interesting, given that more and more content is being made accessible right around the world, both for regulatory and commercial reasons. Commercial reasons being that more content owners want that content being consumed, and captions and transcription help you do that.
Awesome. Thanks a lot for the presentation today, Tony, and appreciate your time. That is all we have time for this session, and thank you and appreciate it.
Thanks very much.
Cheers.